Music, much better looking day. For Wiscasset here, green pretty much everywhere, including bombs, including Bitcoin, including stocks, and some of the key AI players that kind of drifted a little bit sideways over the last few weeks. Got Tom here with me in studio, and Adam Lampy joins us from Mint Wealth Management, co founder and CEO. So, Adam, are we still in the melt up phase? We just took a breather for a couple weeks, or what? Oh, we're certainly in the early stages of the gold rush for AI, as far as I'm concerned. I look at NVIDIA as kind of the godfather of the stocks. I mean, the fact of the matter is they've invested in dozens of companies, startup companies in AI. The golden ticket these days is you have to partner up with NVIDIA. And I think that's really something that we should all watch out for. It reminds me of a conversation I had over a year ago with a DO partner. And he told me, AI is going to change the world. And boy, was he right. AI in the last 3 years is up almost 700%. And I think, conservative estimates show it about 24% in the next annualized for the next 6 to 7 years. So I think there's a lot of opportunity there. As you mentioned, NVIDIA's investments into other companies and their venture arm as well. A few folks have expressed the concern that if they're investing into early stage companies with their own money, and then those companies are using NVIDIA's hardware to power what they're doing, that we might be creating a price insensitive demand for NVIDIA chips. Do you feel any concern that that could be the case? I like it to look at the broad picture. And the broad picture is, the largest, investment companies out there, like JP Morgan, are saying that, AI could increase GDP by 10%. That's remarkable. I think it's a huge opportunity. I mean, if you look at, rising rates right now, or potential of rising rates, or I'm sorry, the potential of falling rates. You have to look at high dividend stocks, and they typically have outperformed. But I think with AI coming into play, I think it might be one of the few times since 1956 that other areas of the market will outperform in a declining market. Interest rate, market environment. Interesting. So you think they might be able to win out as kind of a growth trade that beats all else? Yeah, I mean, I think AI is here to stay. A lot of companies. There's a lot of potential for reduced cost in the labor market and helping inflation. Um, I mean, the conversation that I had with Dio over a year ago, gosh, it really resonates today. And I think with the projections that I'm looking at and a lot of the big firms out there saying, "Hey, this is where the real growth is." I'm excited now. Are they going to be headwinds out there? It is an election year, and we know, in recent times, 82% of the time, the market is positive. But I think the real opportunity is in this AI sector. AI still has a lot of to grow, and so does NVIDIA, the company that dominates the massive AI chips market. In fact, NVIDIA's data center business, which includes the company's H100 chips that are widely used to power generative AI apps. Like ChatGPT has been growing at an astounding rate, and in the most recent fiscal year, NVIDIA's data center revenue skyrocketed a whopping 217% to $47.5 billion. If you're an NVIDIA investor, then you might be happy to know that this is just the beginning for the company. According to analyst Vijay Raikes of Japanese investment bank Mizuho, this segment's astonishing growth is set to continue at an even more astonishing pace. And that's not everything, because he predicts that the company will reach a $4.4 billion market cap in just 3 years. And since NVIDIA's current market cap is around $2.2 trillion, he's basically saying that the company will double its market cap by 2027. So why does he think so? Let's find out. But before we do that, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market. So click the follow button if you don't want to miss the newest market updates. Now, back to today's video, time for FOMO. And look no further than the stock that maybe defines the term. NVIDIA, Jenny Oliver Rank, or our own Oliver Rank, tweeted something kind of tongue and cheek about like importance of things to the market. Right now, number one on his list was NVIDIA. And it's hard to disagree with that. You tend to be able to look at where NVIDIA is and have a pretty good idea. Day to how the market's doing for context of that last 30 trading days. S&P correlation to NVIDIA is 79. So it's still in that strong territory. It has come down. I saw it as high as 0 and 4 a week ago, which is, essentially a line at that. So it has come down a little bit, but anything above 7 would be considered strongly correlated. Yeah, and I was making the same argument. I was talking about this job numbers with Tom today on the Future Show. And I was like, hey, I know the jobs number is important, but what's NVIDIA doing? Because it's like our running joke now of like, NVIDIA has become the new Apple. And I even think more so in the sense that like the market way more volatile than Apple. It is way more volatile than Apple. And hey, making a nice move to the upside. Today we're up 2.6%, but still facing to close out a losing week, which feels relatively unusual for NVIDIA. And I feel like some of the unraveling started when we saw the market tank yesterday, especially the back half of the session. NVIDIA was lower, but then also in the same regard, NVIDIA does still have a degree of resiliency. We did see that earthquake that had affected Taiwan several days ago in the ways that a lot of these names like Taiwan, Semi, of course, and then some of the other chip makers were somewhat reeling on the news and how it could impact the supply chain. And NVIDIA, going figure, was still ripping. So it's like they are able to somewhat shake off. Seems like a headwind that's specific to the chip sector quite well. I know we're losing this week. I actually think this pullback has appeared relatively healthy because you cannot have a name that just goes up every single day. It felt like, okay, I'm starting to buy into the bubble narrative because I don't think that this stock is necessarily never going to go down. As of the time of this video, NVIDIA stock is trading at around $880. And while this is an impressive 83% gain, year to date, it's a decrease of around 7% from the $950 it reached in March. But this dip could be a great buying opportunity, according to analysts who are still bullish on the stock. And one of them is Mizuho's VJ Rakes. According to Rakes, NVIDIA's data center revenue in the current fiscal year could jump 87% to about $89 billion. Not only that, but he also predicts that data center revenue could jump to $280 billion by 2027, which will coincide with the company's fiscal 2028. This means that NVIDIA's data center revenue could increase at an annual rate of 56% over the next 4 years. But is that really possible? There's a really good chance NVIDIA could achieve this, and we're going to tell you exactly why.